Wednesday, February 19th. Big show today. Big show. It's hump day. FOMC meeting minutes at 2 o'clock. We get to find out what the hell those people said. VOO took over SPY. We'll go over that. We'll go over a move that I told you paid members to do in November. That has turned out fantastic. Strategies, an 821 strategy on the stock you're seeing, QQQ. We'll talk about the results there. Paid members, I will be going over the 3 best beaten down alpha pick opportunity stocks that I see to maybe add, because we can see winners. Steve Kress is doing a Zoom meeting today, 6 beaten down stocks that are rated buy. We will go over country ETFs and how to look at those. We will be going over SMCI, Palantir, Meta, Snow, and China stocks. It's kind of interesting. Who's going to be broadcasting the NFL next year? Catalyst right there. Lam Research, Charlie Munger strategy for AMD. New alpha pick yesterday. What happened? We'll talk about that. And an alpha pick bonus. This isn't for paid members. This is for everybody. I will be going over a stock yesterday that's in alpha picks that was up 10%, has been beaten down, was the subject of a short squeeze, a short report, I should say. And then we'll go over social requests. And my apologies up front to anybody that I go off on. You've got to understand, I'm an angry old man who yells at kids to get off my lawn and I won't return their ball. Don't get mad at me. But when you ask me about particular stocks, I understand that everybody is new. But I want to put this out there to the universe so that if you're listening, understand when you listen to my show, don't listen to specific stocks. The goal of this show is not to tell you to invest in this stock over this stock or this stock over this stock. The goal of this show is to empower you to be able to make that decision yourself. My opinion shouldn't matter, because if you ask me about AMD, I don't own the stock. Again, if you ask me about any stock, if I don't own it, that should be a signal about my opinion. But my opinion doesn't matter. I'm the guy who sold Palantir at 25. It's currently at 120. I'm the guy who sold Tesla at 420, which could have been worth almost $1 million today. Okay? I'm the guy who sold Bitcoin in 2018, and then it started running. So again, my particular opinion does not matter. Absolutely. It should not matter. So when you ask me about a stock, just understand, if you just put the ticker symbol in and I ask you a question, why do you like this? And you tell me, well, I heard somebody talking about it, but I'm new and I don't know. Go and listen to the show. Okay? You're the guy that's in class that didn't do his homework, and then the teacher calls on you, you're like, I don't know. Doing the work is part of this. If you're not going to do the work and you're not going to look up a stock, I'm not here to service you. You know, this isn't a glory hole. You're not sticking your stuff into a glory hole and saying, service me, please, master. No, that's not what happens. This is about empowering you to manage your portfolio. And if you don't want to do it, I also give you the opportunity to just go and buy VOO. We'll talk about VOO. Okay, the S&P yesterday closed at an all-time high. The Qs aren't at an all-time high. Right now you're at, let's see, it closed at 539. The high was 539. The 540 it hit yesterday. Did we hit 540 before? Let's see. Let's just go over here to, we'll go to QQQ. Oh, come on. QQQ. I need to yell at myself about typing. QQQ, let's see, 54 week, 540. We hit an all-time high. You hit an all-time high in the Qs yesterday. You hit an all-time high on SPY yesterday on the S&P. So you're at all-time highs. Does that mean you get out or you don't buy? Nope. Listen to the words I say. Ryan Dietrich, should you buy when stocks are at all-time highs? That's a popular question. My take, don't be scared of new highs, as the S&P is up a year later 71% of the time after an all-time high. Median gain, 8.3%. In other words, It's normal returns because your average return on the S&P is 8%. Don't be afraid. Don't go balls deep. Don't stick the whole thing in. Not at all-time highs. My opinion is you constantly just add to your VOO. And as it starts to pull back, you can take long-term capital gains. You don't want to take short-term capital gains. You can take long-term capital gains because taxes matter. And you can take those out. Okay? November 16th, I did this. Portfolio management. I made a change to optimize the cash that I have in 2025. Okay? What was that? This was the newsletter on November 16th. It's for paid members. And I said, hey, I'm going to make you back the $190 that you paid me for the year. And November 16th, I said, you know what? I'm going to take the cash that I have and put it into VOO. Why? Well, interest rates are coming down. So if you have a high interest yielding account, you're making about 4 to 5%. Sounds great, doesn't it? 4 or 5% on a year basis. Okay, so let's look at November 16th. We'll go to VOO. And November 16th, if we go back here, let's see, November 6th, November 15th. We can take November, let's take November 19th. It's this nice big candle. And we'll take that. The high was 542. Let's say we bought that at 542. Okay, if you are where you are at today, that's 91 days, you're up 3.6%. Okay, so say it's 90 days, it's a quarter, and you're up 3.6%. Remember, high yielding savings account, they're going to make you 4 to 5% over 1 year. If you times this by 4, and we continue in this range up, you're at 12%. You have outpaced your high yield savings account. And the argument I made was, with this dip, I like it. After the election, I like it. Was I right that was the last dip? Absolutely not. Were you losing money here in January? Absolutely. But if you just started to add every now and then, even when you were at these highs, you're back at all-time highs. Does that mean we're staying there? No. Look at the weekly. The weekly's going to be tough. We're going to remove this segment annotation. We're going to remove that one. It is extended on the MACD. And again, listen to what I look at. Don't listen to the actual stock. I'm looking at the MACD, moving average convergence to divergence. That's an indicator. I'm looking at the RSI, relative strength index. I'm looking at the Bollinger Bands. And I'm looking at this range that I just put in all the way back to November 4th. That was the week of the election. And we're in this range. That top, at some point, old resistance, which it is resistance, will turn to new support. Listen to my words. Don't focus on the stock. Doesn't matter what symbol this is. All stock charts are made equal. They are exactly the same. Okay? It's about reading them and trying to make an educated guess about where it's going to go. That is all anybody ever does. And it's an educated guess using the indicators on the screen. You've got a 200-day that's moving positive. You've got a 50-day that's moving positive. You've got a 9 and 21-day that are moving positive. You are in a bull market until you're not. Okay? Again, focus on my words. And had you signed up for the newsletter and let us help you grow, again, that song sticks in my head. But you'd be up. You would have paid for your entire subscription to the paid newsletter. That is my goal with the paid section, is to make sure that you make at least $189 with the tips that I give you. Now, it's a way to support the podcast. That's it. So let's talk about, you know what? I want to go back and look at QQQ because we talk about strategies all the time. And I will put this little post in the newsletter about TrendSpider. TrendSpider posted a daily 821 EMA cross on QQQ has been a swing trade entry that has stood the test of time. So that is very simple to do in TrendSpider, okay? It's right here, and I will read it to you because you can't see it because it's hidden on the bottom of the screen. But you type in EMA 8, cross up EMA 21 on the entry, and then the exit, you're going to type in EMA 8, cross down EMA 21. Okay? That's literally what you write. It's not like you have to click buttons. You just hit at a human language condition and you type that in. That's how easy that is. Now let's take a look at it. Because over the last 5 years, we can go back and we can test this for 5 years. Let's just go back. We'll go back 2020 and we'll go 2020. And we're just going to do 5 years. And so the performance, I mean, it says it right there. 98.5%. You make 131%. But if you're scared of all-time highs, because we've been at all-time highs, if you're scared of 2022, where the market tanked, if you're scared of those types of things, we can go back and look at 2022. Look, it still got you in, got you out with losses, but it still got you in. But over the test of time, it's a 50-50 win rate. It has 24 positions over 5 years. 24. That's not a lot. 50-50 win rate. Your average win 10%. Your average loss 3%. So if you're scared, if you don't have fear, buy and hold risk tolerance, this may be a strategy for you. Again, finding a strategy is important. But this one, clear winner. Clear winner. Now I'm going to put this back down to 1,000 candles because I like 1,000. Let's say we're going to go back to the 4 hour, but that is clear and simple. If you want TrendSpider, you can absolutely 100% get it, and it's on sale. Okay, they've extended the offer. Let me just make sure. I think it's 16 more hours. Yes, you can try it for under $21. Literally, you can put that in and then test it on every stock in your portfolio. Just the 821 crossover. This 4 hour algorithm, I think it performs better. I am much more comfortable on a 4 hour than a daily, but that's my strategy. Is it yours? I don't know. You have to find your strategy. Now, paid members, I'll be going over 3 of the best alpha pick stocks that have been beaten down. And if you're a Seeking Alpha member, you'll see up here, free webinar. Okay. Steve Kress is going over a free webinar today at 4 p.m. I'm sorry, it's tomorrow at 4 p.m. 6 beaten down stocks. Join Steve as he discusses 6 undervalued stocks with strong fundamentals and attractive valuations. Again, that's why you want Seeking Alpha, because they do this kind of thing. They put it out there and you will be shown how to use Seeking Alpha to find opportunities. Okay? Now, VOO takes the ETF crown from State Street SPY. SPY for years was the winner. Okay, I've been touting VOO. Why have I been touting VOO? Well, when you look at VOO, it has a significant, it's not significant, it's lower, but the expense ratio. Okay, we can look at the peers and we can let's just edit symbols. We're going to just look at SPY and VOO. I don't know why they don't put the peers in there, but we're just going to look at SPY and we're going to say SPY. And when you look at it, here's the expense ratio, 0.03 versus 0.09. SPY is very good for options. VOO is very good for just buy and hold. That's it. That's very simple. You can see the performance, the 1 month performance, VOO's up a little bit more. 3 month performance up a little bit more. It's just up a little bit more. Expenses matter. Again, use Seeking Alpha to try and find the ETF that fits your risk tolerance. But I would tell you, that article that I just showed you on VOO, it's fantastic. Okay? Now, country-specific ETFs are on a roll. Now, this little tidbit right here, year to date, Brazil's up 17%. How can you see this? Go over to Seeking Alpha, you go to market data, and you can scroll down here and you can look at countries, sort it by year to date. You got Brazil, Germany, China, France, UK, Japan, and the US. US is last. 6 of 6. Brazil is up 17% year to date. So here's the rabbit hole that you go down. You click on EWZ and you say, why is this up 17%? You can see it's down 21%. But what does it have in it that's going up? Oh, it's number 1 holding, new holdings. This is financial. Look at that year to date. Year to date, this one's up 30%. It's a winner. Go down and do that for each country and you'll find a winner. Maybe those are stocks that you want to invest in. Again, it's a rabbit hole. It's a whole rabbit hole that you can go down. Now, let's talk about individual stocks. Before we get to that little tidbit, let's talk about SMCI. Because SMCI, is it time to get into SMCI? Let's go and do the research. I'm going to show you how I look at a stock. Ignore the stock. It's SMCI. Ignore it. Okay? How do we look at it? Go into Seeking Alpha. This is all I would do if you asked me about a stock. You can do this on your own. Okay? And maybe I know a little bit more about these stocks because I've had my money in them. If you're going to put your money into a stock, you better know what I know, if not more. Whatever your comfort zone is. Do I know SMCI is like actual business? No, I know it's server racks. I know they do the servers with the NVIDIA chips. And I know that NVIDIA sells them the chips and then they put it into data centers. So I know this company has a $32 billion market cap. I know that its 52-week range is between 17 and 122. Boy, don't you wish you bought at that $17 mark. It's trading today in pre-market at 59. Okay? This is a company. The reason I got out of this one is because their auditor quit. Not worth my risk tolerance. Is it time to get back in? For me, probably not. But year to date, this one is the top stock in the S&P. It's up 83%. Since January 1st, you have almost doubled your money in this stock. And I haven't been in it. So when you're going to ask me, is it time to get in? My risk tolerance doesn't fit this. Okay? Yesterday, 10:20, Supermicro shares spike ahead of filing deadline. They're up 7% in pre-market. They were up 16% yesterday. It doesn't fit my risk tolerance. Is it time to get in? If I'm technically trading this, it's time to get in. The 4-hour algorithm, which makes you over the last 2 years, 24 months, it makes you 395%. Okay? 522% if you bought and held. So if you've bought and held for 2 years, you've made a hell of a lot of money. But most people did not start buying this one in 2023. Okay, I bought in November 2023. I think it was around $300, which would put it at about $30, but it's up 522%. Now, if you bought the 4-hour algorithm, you're up 395%. That's good. Hasn't been great lately. But that $31 buy right now, where it's at 60, you've almost doubled your money since February 5th. Okay? So if I'm trading it technically, I don't care about the fundamentals. I don't care that they have have an auditor problem. I am going to trade this one on a 4-hour algorithm. That would be where I would go. Okay? That's it. Find a strategy. And if you want the 4-hour algorithm, sign up for a yearly plan on this. If you want Seeking Alpha, get the bundle. Because I'll go over an alpha pick that has been down, that is coming back up, that was up 10% yesterday, okay? This is the bundle. You save $159. Get the bundle. You go over to Linktree. The top one is TrendSpider. The second one is the bundle. The third one is Seeking Alpha Premium by itself. The fourth one is Alpha Picks by itself. Why do you want Alpha Picks? Well, Alpha Picks portfolio delivers performance. It's a strategy by itself. It's a stock on the 1st, a stock on the 15th of each month. They alert you when to sell. We got an alert to sell yesterday. And part of that was Sprouts Farmers Market. I'll go over that in a little bit. It wasn't a complete sell. It was because it performed so well, you need to trim it. It's an actual data-driven portfolio. And it's part of my strategy. Okay, these are stocks that I would never invest in, but I spent 8 months trying to pick and choose which stocks I wanted to invest in this portfolio. I did not beat the portfolio. So finally, in September or October of last year, I decided I am going to just get into the portfolio. And they show you how to do it. It's super simple. In the newsletter every day, I'll throw in a video of how to do it. It's super simple. Now, Palantir, this is another high-flying stock. This one was up yesterday. It's at 123. Ever since the earnings, you've seen it go from 99 to 120. That's a great, great move. It's doing amazing. Would I invest in it from a standpoint of fundamentals? No. When I look it up here, I see it's a strong buy in the quant. I have no idea why it's a strong buy, but it moved there in 124. But the valuation to me is too expensive. It's just too expensive. But again, it's a strong buy. Wall Street thinks it's an $84 stock. That's 32% downside. The quant beats out a lot. And for application software, this is the #1 quant rated stock above quantum. Okay. Am I getting into this one? No, it's just too expensive. I will continue to hold this through an ETF. But if I wanted to trade it, I would use the 4-hour algorithm. Why? Because the 4-hour algorithm got you in here at 70, okay, in January. You've almost, again, doubled your money. It makes you 599% against 1,382% if you bought and held. You win 52% of the time. Find a strategy. It works. Again, if you want the 4-hour algorithm, sign up for TrendSpider. But again, you have to find a strategy. Okay? There's another one, Meta. I have Meta. I own it. I don't own enough of it. I want more of it. It's one of those that I want. Look at it coming off of its 20-day. It went 20 days with a positive. It snapped that streak yesterday. Look at how high the MACD is. The RSI quickly came down to 56. The 4-hour algorithm makes you 157%. Okay? Here's the kicker. You make more by buying and holding, but you win 59% of the time. Over 24 months, there are 22 positions. You win 59% of the time. Your average win, 11%. If I were scared of things, I would have this strategy. Again, find a strategy. Now, another one that you could have a strategy on that's doing well, Snowflake. Look at this little dip right here. You might say, well, that doesn't work in the 4-hour algorithm. Well, the 4-hour algorithm, 27 positions over 24 months, you make 4%. Buying and holding makes you 20%. Your win percentage, 37%. But I said I didn't like the 4-hour strategy on there. So how did I trade it? I went to a weekly candle and I quickly identified, you know what? This is in a nice range right here. It's in a good range. So I want to buy at the bottom portion of that range and I want to sell at the top portion of that range. I sold out of my Snowflake. I sold out of my Snowflake at about 190. It's trading at 191 right now. I don't trust that 200-day. So again, finding a strategy is about finding your own personal risk tolerance. It's about finding a stock that may be a buy and hold stock, but it might be something that you want to trade. Okay? Baba is a great story. I don't want to touch China stock, but Q413F filings show big money into China stocks. Michael Burry, 16% of his portfolio is Baba. Remember, most portfolio managers don't want anything over 10% of their portfolio being in a stock. Michael Burry has 16% of his $1 billion in Baba. David Tepper just upped his Baba stake by 18%, making it his largest holding by 2 times. Okay, would I trade the 4-hour algorithm in this? Absolutely. Over the last 24 months, you make 41% versus 19% buy and hold. There are 30 positions. You only win 30% of the time, but in January, it got you in here at 82. You're trading at 126 right now. 126. And I said, hey, if this holds the 120, that old resistance could turn into new support. We'll go and look. Where does that 120 come from? It comes from the weekly candle. Look at how clear that is. It popped up here, touched 120, couldn't hold it. 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 We're currently holding it. If it can hold it, that becomes your support. And where's the next leg? Probably 180. Because again, This one, from a fundamental standpoint, it's not great, but it's not horrible. The PE's 14 and 15. Okay, it's the growth that's killing them. The growth is killing them. But if China can actually grow, remember, Baba is the software, the AI that Apple's putting on their phone in China. It's the Chat GPT. Could they grow? Absolutely. So find a strategy that works. Make sure that you have these elevator pitches for the stocks that you own. If you don't, and you're just buying it because somebody's telling you, rinse and repeat. It's not difficult. So when you ask me about a stock, tell me more than just the symbol. Tell me what you like about it. Tell me what you don't like about it. But if I don't own it, my opinion doesn't matter. Okay? Major League Football right here. Breaking. Netflix is looking to pay for its right to NFL. Remember what happened last time. Okay? The last time the NFL was on Netflix, it was Christmas Day. And with earnings, they shocked the world with the amount of customers that they had. Is this one expensive? Absolutely. Do I own a ton of it? Yep. $1,000 in my mind turns into the support. Now, would I buy here? Probably not. I'm simply holding it. But again, that's a great catalyst for you to look at and to find a place that a comfort level. The algorithm makes you 178% over the last 24 months. You win 50% of the time. Maybe that's the one that you want to do because it got you in here at 861 right before the earnings. And ever since the earnings, we've just been going up. It'll pull back. You can look at that 980. If you can get it under $1,000, I think that's a good buy. If you go and look at Netflix in the quant, it's a hold. Why? Because it's expensive. Okay, it's trading for 41 times forward earnings, the PE forward. And if you don't understand what fundamentals are, use the Analyze with AI. It will guide you through that. It tells you the competitors, Amazon Prime, Disney Plus, Apple TV. It tells you the metrics, valuations, considerably high. Growth demonstrates strong growth, profitability, superior profitability. And then you have to put your money where you feel comfortable. If you don't feel comfortable buying this one at $1,000, don't buy it. Buy an ETF. Okay? Have exposure to it. That would be my guidance. But I am perfectly fine holding this. I think my average purchase price is somewhere in the 200 to 300. And nobody, Bill Ackman's coming up. Somebody asked me about Bill Ackman later. Well, I'll tell you, Bill Ackman bought it here. He bought it here in November 2021 or December 2021. It might have been January where he bought it. And then the earnings came in. Dude just ran with his tail in between his legs. Took like a $1 billion loss on that one. Okay. He got out well before it hit the bottom. But it was selling for $300 back then. He bought it at like $500. He would have doubled his money had he just held it or had a strategy. He didn't. He bought it. He thought it was going to do good earnings, and then they shocked the world with cutting the customers. They didn't get customers. But again, if you bought it here, you were perfectly fine. You could have added to it. It's a business that I believe. I'm not disconnecting my Netflix, and that's why I like it. Now, LRCX, semiconductor names coming out of a big base, first close above the 200-day. The 200-day is a big one. LRCX. We can take a look at this one. What strategy would you like in this one? I don't personally own this. We can look at the 4-hour algorithm. It makes you 29% over the last 2 years versus 66% buy and hold. You've made 66% if you've bought and held. When you look at a weekly chart of this and you go back a couple of years, you're still in an upward trend, but you've gone below the 50-day. Now, this chart is telling you, hey, on the daily, when you look at this, it's telling you that yellow line, mine is a red line on my charts, but they're using a yellow, and it's just getting to its 200-day. That typically, if we go and look at a daily chart of this, okay, that red line right there, and you've got a gap above, and I talk about gaps all the time. Is that going to fill? Maybe. Again, maybe it makes sense to play that one. Now, AMD, Charlie Munger's strategy for AMD. If all you ever did was buy high quality stocks on the 200-week moving average, you would beat the S&P by a large margin over time. The problem is few human beings have that type of discipline. Well, AMD on a weekly, it's right at the 200-day. We can go and take a look at the weekly right here. You can see it's a beaten down stock. But if you buy it under the 200-day, will you make money? I don't know. MACD looks extremely extended. But I could talk you out of this on a fundamental basis. But again, I'd talk you out of Palantir. I would talk you out of SMCI. And I haven't made those moves. This doesn't fit my risk tolerance. The chip stocks that I own Broadcom, I own Credo, and I own an NVIDIA. And that's it. Am I getting into Intel because that one's soaring? No, doesn't fit my risk tolerance. I like this. This one, AMD, valuation, not bad because it's come down so much. When you look at Wall Street, they think it's a $150 stock. Have they chased it down? You bet. Will they chase it down further? Probably. So again, find your risk tolerance, find the stocks that you like, and nobody will ever be able to tell you this stock's going to go up. Again, rinse and repeat. Where you put your money is your decision. You're all adults. Okay? The people, think of it this way. The people in school who were super, super successful and got the A grades did the work. Michael Jordan was just an average high school player, just an average, college player. He was probably above average, didn't become the greatest until he put in the work. Now, there was gambling, there was drinking, Dennis Rodman. Again, you can argue with that stuff, but you put in the work to become the greatest. Tom Brady talks about how many, look at the lifestyle that Tom Brady lived in order to become the good, the number one Super Bowl guy. Look at the lifestyle that Patrick Mahomes does. Look at Tua. There's a lot of Tua. I don't know how to say his last name, but there's a lot of great videos of Tua throwing the exact same pass in practice that he does in the game. Again, you've got to put in the work. So to be able to ask me a question, it's just a little bit nuts. Now, I talked about alpha picks being a strategy. It is one of my strategies. This was crazy. We got a new pick yesterday, and this is the pick. The candle. Alpha Picks portfolio is so popular that they have a tremendous amount of, look at the volume candle on that. I can't tell you what the pick is, but it's a 15% candle. It was crazy. That's a 1 minute chart. Okay. I'm sorry. That's a 5 minute chart. When we got the announcement, the stock started trading at 36. You had 6 minutes between the time when you got the email, and I got the alert from Google because, again, I have alerts set up that when Alpha Pick sends me, it alerts my phone. It literally is an alert on my phone, not just an email alert. It's a special alert. And I got the alert. I was busy outside with the dogs. I didn't get to buy it, but I paid 10%. You literally had 6 minutes between it going from 36 to 40. Another strategy for Alpha Picks, get the email, set up an alert, buy the damn stock the second it comes out. Don't ask questions. 10%. That's a strategy. And there was a sell yesterday. I will put this in the newsletter. Okay, the sell in Alpha Picks, it's a rule-based portfolio. Rules-based. So with 117% return, it's time to sell the initial investment and let the rest ride. So what are they doing with the portfolio? Again, it's Alpha Picks. They're doing what they do best, which is managing the portfolio. I had put $954 into the original buy. Okay, I didn't buy this one. This was Sprouts Farmers Market. It was actually in June, I think, they told you. They have made 117% return on that stock. They took out the initial investment. And they said, you know what? We're just going to let the profits ride. But we're going to take the money that we have and put it back into the overall portfolio. And so you take the $954 that I bought, and you spread it out over the 36 other stocks in the portfolio. Okay? I will rebalance every quarter, and this is my strategy. And what they say, Sprouts Farmers Market has returned an impressive 117% driven by its focus on health-conscious consumers. Our systematic approach requires closing initial positions in winner's circle stocks after 180 days with a hold rating, taking profits while allowing the remaining returns to compound. It's simple. It's simple. I mean, again, it's a very simple strategy. Now, another stock that is a alpha stock, alpha pick stock, I'll give you one. It's ZETA. Okay? It was up 5% yesterday. I think got up 10% yesterday. You can see the day range between 24 and 26. When I looked, it was up 10%. Still a buy. Just turned to a buy yesterday, 24.86. Let's look at this one, because this one has not been doing that great. And when you look at the chart, is it an opportunity to buy it? Well, just like AMD, I think it was AMD with the gap of LRCX. This one just crossed the 200-day on the 4-hour. And you can see you've got a gap up here at 34 and 35. Is it going to that? Maybe. Do your research on the stock. Understand what you're buying. I want you to do research on the stock. I'm not going to give you what this stock is. I already gave you the symbol. Do your research. If it fits your risk tolerance, go and buy it and go and do the stock. And do it smartly. If you've got $1,000 in your account, don't put $1,000 into this stock because somebody told you that it was a good one. Again, when you can use Alpha Picks as a portfolio, one to look at the winners. This was added to the portfolio. ZETA was added 8/15/24. It's up, but not much. I think it's 4 or 5%. It was added between $23 and $25, depending on when you bought it that day. And there's a gap fill that potentially could happen. This was a short report that took the stock down, and many analysts kept their price targets the same. Those were my notes. Look at this weekly. It's been beaten down. Again, the short report just hasn't seemed to come true. So between Alpha Picks, again, those are the things that I like. This is a chat with Chris Camillo. I put these for the paid subscribers. It's just a bunch of stuff. So now we're going to get to the social requests. And again, I apologize if I yell, but let's see. Dominic from Spotify. I'm still learning, and I finally learned how to read charts not too long ago. I try to stay focused on volume and price, but sometimes I get caught up with indicators such as RSI and MACD. How do you decide this is the stock? On a side note, I got BBAI before it was $5 without understanding charts, but I like the stocks thanks to Reddit. I wrote it back to him. You decide. You're making an educated guess. You decide if this is the stock. That's why some people are better off sticking with VOO and chill. But indicators don't know the fundamentals of a stock. So if you're talking about technical investing, technical traders don't care about fundamentals. It's all about making an educated guess and then putting your money into the stock. There is no magic formula, nor is there any logic that I can make you money. BBAI is a stock that's not making money. Trade it. Nobody knows the long term. So I don't know if BBAI is a long-term stock. We can take a look at it. It's brand new stock. Nobody knows. I mean, name the CEO. Again, if you can't name the CEO of the stock that you own, you probably shouldn't own the stock. But name the CEO. And here's my rant. I get this particular question. I get this a lot from new investors. My opinion is my opinion. I don't own BBAI. I will never tell you to buy or sell a stock. I will give you an opinion, but many times I'm wrong, like everybody else on Wall Street. I remember investing in the internet in the late 90s. Yahoo had the #1 email service. Yahoo had the #1 search engine. Yahoo had Microsoft had the #1 browser. It was Internet Explorer. Apple was so small, they didn't even matter. Cisco was running networks. That was the winner. Google was around with Gmail and search, and Chrome was right around the corner. Sun Microsystems was competing with Cisco in the server space, and everyone said the internet would be built with servers, so you had to invest in Cisco and Sun Microsystems. Yahoo, you could have picked it because it was the #1 browser and email and search engine. Loser. You could have picked Microsoft because they had the #1 browser, and Microsoft was everywhere with personal computers. You lost money for a decade. You could have picked Cisco. You were still on you're still not back to where Cisco was trading. You could have picked Sun Microsystems. They were bought by Oracle at a fraction of the price that the stock was trading. BlackBerry was the entrenched mobile handset. And everybody said there's no way that a phone without a keyboard or, security with IT departments, there's no way iPhones will ever win. My point, nobody knows long term. The news will get into your mind and it will sway you. You have to make that determination. And if somebody tells you, I know what the future is, 50-50 flip. Again, stock goes up, stock goes down. It rarely trades sideways. It goes up, nobody knows. When you ask me about BBI, it's a company that's not making money. The company has a $2 billion market cap. And where do you find that? Let's just go to FinViz. I mean, you don't need Seeking Alpha. Again, the tools are out there. $2 billion market cap. See, right there, $2 billion market cap. What are their revenues? $155 million. $155 million, $2 billion. How long does it take to actually turn a profit? Their income minus $170 million. No way anyone can guarantee you that it will make money. I don't even know what they do. I just know it has AI in the term, and probably that's the same. So if you're going to trade it, you're going to trade it. But understand that those indicators are there to help guide you with an educated guess. Me going over this should not change your mind. You said you just learned charts. My advice, learn how this chart reacts. Trade it. Find a 1-minute strategy. My 4-hour algorithm over 24 months, it makes you 110%. Get my 4-hour algorithm on TrendSpider. Buying and holding makes you 65%. But that's because there's huge wins here. Look at this one. It got you in at $1.73 in November. It got you out here with a 92% gain in January. So me going over this should not change it. Now, if you want to know, the variance tester right here, which I'm not an expert on, but it's a great way to find a stock trading on some of these tools that you have. Okay, it's great. But me doing an elevator or pitch on this stock is completely disingenuous. And the reason is I don't have any money into it. I've never traded it. I've never owned it. So now Adam asked me, hey, Gary, can you go over your thoughts on Bill Ackman buying HHH? If he does, would it be smart to get in? Adam's new as well. I don't know. You know where I would go for something like that? I would go to Twitter and I'd look up Bill Ackman. And I would look at, let's see, Bill Ackman's right there. He's live. He's probably announcing some damn thing. I don't know. He's announcing the Howard Hughes print. Watch it. I don't know it. I don't know. But I would look at the comments, under this. We can go and look at some of the comments right here. And we can see, from exposing Herbalife, in more recent, having the courage to publicly take a stand that 98% of the other billionaires refuse to take regarding our social and political climate. I mean, go and find it out. I don't know if it's good. You want to know where else? Perplexity. Let's go perplexity.com. This is an AI. Let's see. With Bill Ackman making an offer on HHH, is it a good buy right now? That's as good as asking me. And I'm sure it's going to tell you we can't give, but has recently raised its bid for the revised offer, an increase from the previous bid of $85. While this news has generated significant interest, it's important to consider several factors. There's your answer, Adam. Use the tools that you have. And again, don't think that I'm an expert in everything. I'm not. I have to do the research like you. So when you ask me about a stock, I have to do the research. And I'm not your school grade teacher. I have a quote here. Famed investor Bill Ackman is looking to create a Warren Buffett-like company after his closed-end mutual fund structure failed to gain traction. He failed. In a tweet, he outlined his grand plan, which involves purchasing Howard Hughes Holdings, and we'll share more via a live stream tomorrow on X. That's what he's doing right now. Let's hope he has better luck than the previous investors who were dubbed the next Warren Buffett, because most of them did not live up to the hype. So I'm not following Bill Ackman. I don't follow people typically on this stuff. Is it a great opportunity? Do the work. Then you have to take the chance with your money. I have not. I would be disingenuous by giving you any other advice. But Perplexity absolutely can give you some advice on that one. That's it. Go to the source. Now, Rick from Instagram, he wants me to look at Teradyne. Hey, can you give me some advice on Teradyne, TER? I wrote back to him, I don't own it. And if I sound terse, the reason is because you can't do this. And Rick is new. He says, hey, I'm new to stock buying, got word of it from a douche on the internet, researched it, looks like a smaller company that provides great AI services to some powerful company, thinking it could be a good hold investment. Well, I said, go to FinViz. Look at TER. It's a semiconductor company. It's not AI. So first off, my guidance to you, Rick, is learn what the company does. If you're going to buy, say you're looking at cars and somebody says, hey, I've got this hydrogen car. It's great. Are you buying a hydrogen car? Again, do you know what fuel it runs on? Do you know where the filling station is? Do you know how you're going to get service on the car? You're putting your money into a stock. You better know what it does. And Teradyne, do I like it? FinViz is free. This is a tool that you should have in your bookmark. If you're going to invest in stock, this is a tool. Again, listen to what I do. Don't listen to the stock. Watch what I do. FinViz, $18 billion market cap, income of $542 million. It's good. They're making money. PE of 21, forward PE of 21. And if you don't know what this is, you can click on it or even go and search what it is. Search what these things mean. Go and just look at Investopedia. Go and ask the internet. Asking somebody on the internet is giving you an opinion. The internet is filled with facts that you can find, but it's also filled with opinions. You have to make up your mind. Nobody's going to tell you if this is a good one or not. I'm aware many people are new. Many people you don't listen to everything I say, but you have to know how to look this stuff up. I would also argue, based on the request, that people don't listen to me. If all you hear on the podcast are the actual stocks that I bring up, you're not listening. The podcast is about strategy. It's about finding a technical and fundamental opportunity and how to look it up. The paid tools like Seeking Alpha and TrendSpider, they're great. But you've got free tools like FinViz and Perplexity. Sending me just a name or a symbol and saying, hey, tell me what you think, go and ask somebody else. Because if I don't own the stock, I can't give you a viable opinion on it. I'm not a financial advisor. I'm not a guy who runs portfolios. That's Alpha Picks. So for paid members, that's my rant on it. Teradyne, I probably wouldn't, I don't want it. I don't own it. But I will tell you, the 4-hour algorithm does great. Over 24 months, you make 77%. If you just bought and held, you made 7%. So I don't like the stock. I think it's in a downward trend. You're seeing this one. If I just put in just a one right here, just a trend line, and I would just put in a trend line touching at least 2, I'm seeing kind of downward, 200-day downward, the 50-day just tossed up. I could be completely wrong. Doesn't fit something that I want. On a weekly, the MACD down below the oscillator, fine. If you believe in this stock, you should buy it. But there's nothing that I can tell you that it's going to be, oh my God, I love this one. If I loved it, I would put money into it. You would have heard about it on a podcast about, oh my God, I need to buy this one. Because I am authentic. I don't do anything. There's not 100. I'm not putting out my portfolio to you guys. I do have some on Savvy Trader, but none of those are my personal portfolio. I try not to show that because I want to teach you how to fish versus just giving you the fish. Now, I will leave you with this. Paid members, you are going to get earnings. I'm going to give you a top earnings, a strong buy in the quant since January 17th, a stock that's reporting today that I like, don't love. It's run up into earnings, so I don't love it, but I might put some money into it before, and I might watch this one on earnings. But I'll leave you with this one. This is Warren Buffett, and this is a Benzinga article, and it just kind of goes over it. Warren Buffett said he'd buy a couple 100,000 single-family homes if he could, and he'd take out mortgages to do it. In 2012, Warren Buffett made headlines with his bold commentary. 2012 was just at the end of the housing crisis. Houses were still depleted, and we were still going through a lot of turbulence, and everybody was uncertain about the economy. At the time, the U.S. economy was still recovering from the devastating effects of 2008 financial crisis, and the housing market was one of the sectors that was most impacted. Yet Buffett's perspective was unusually optimistic. He famously stated, if I had a way of buying a couple 100,000 single-family homes and I had a way of managing them, I would load up on them. I would take mortgages out at very, very low rates. For Buffett, homes were not just shelter, but a prime investment opportunity, especially when borrowing costs were so low. You can get a mortgage back then for 2-3%. This insight came with confidence in real estate, which was shaky at best, and many people hesitated to dive back into the market. However, for Buffett, the crisis created a window of opportunity that savvy investors could capitalize on if they had enough foresight and patience. His well-known quote, "Be fearful when others are greedy, be greedy when others are fearful," perfectly captured the mindset needed to navigate the turbulent time. Investors who followed this advice likely saw significant returns in the market rebound. You can read the rest about this. It was a brilliant investing strategy. Sometimes the simplest thing is right in front of you to invest in to make money. And that's what Chris Camillo starts saying. That's why in the paid newsletter, I focused on those types of things. Simple ways. That's why in November, I said, hey, the likelihood that we wind up a year from now at 8% or higher is better than having your money sit in a 4% high interest rate bond fund or savings account. But that's it. Again, I'm sorry if I went over anybody or if I yelled at anybody or if I offended anybody, but the people that just asked me about the single stocks, you're not listening. You're the person who wants to cheat off of somebody in high school. You need to do the work. And the work includes losing money. And the work includes making bad investments. But the work is the work. And everybody has to go through it. Everybody. You learn from mistakes. You will make mistakes. But nobody, absolutely nobody, is going to be perfect. The reason why I like Alpha Picks, I don't have to think about it. And it's got a back-tested performance. I trust it. Do I trust, 100%? Am I going to believe that it's going to make 180% over 61% in the S&P? Maybe not. And it's not guaranteed. There is no guarantee. But the best predictor of the future is the past. And so far, they have done really, really well. So that's why I trust it. Why do I trust my 4-hour algorithm? Because it's back-tested. It's back-tested. It's a strategy that I have found that I feel comfortable with. So find your own comfort level. Ask me about single stocks, but give me more than just the symbol and tell me what you think. And if you're new, at least go out and do some research. You have Perplexity. You have Finviz. You have so many tools that when I started investing back in the 70s, I didn't have any of these tools. None. I had to wait for the stock price to come out in a newspaper in the morning. I didn't have research on this stuff. I had to go and talk to people. Those the days are over. You can do your own research now. Okay, I've talked on for 53 minutes, and I know I got another 20 minutes with the paid members. So, okay, I will talk to you later tomorrow. Say bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.